Hey everybody, it's Eric Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts.
Hey everybody, this is Lucas Bagno, and I'm excited to be here today with my co-host and colleague, Dwane. Today, our guests are Julio Vasconcellos and Ana Martins. Julio and Ana are both partners at Atlantico, a Latin America-focused venture capital firm. Julio is also the co-founder and partner at Canary, a seed-stage firm focused on Brazil. Julio, Ana, and their team published the famous yearly Latin America Digital Transformation Report. They just published the new report today, and we're excited to cover it in depth during this episode. And now, onto the show. Julio, Ana, welcome to the show.
Thank you. It's great to be back, and thanks for having us this year.
It's great to be here. Thank you for having us.
Awesome. So we wanted to start off by, just asking you a little bit more about how the markets in Latin America are doing. Here in the US, we've heard some reports that markets are down 40% relative to last year. What has changed in the venture capital landscape in Latin America since then?
So the first thing I would say is that Latin America has moved, fairly in lockstep with the US markets and the global markets. So in the same way that we saw a massive boom last year and to a lesser degree the year before in 2020, both of equity prices of publicly listed tech companies, and obviously that trickling down to private technology companies, and then that eventually being seen in the amount of funding that you were seeing sort of in venture. That the same kind of thing was happening in Latin America, right? We saw in 2021 being a record year of financing and record year for valuations and IPOs. I think the Nubank IPO in the US at the end of the year was probably kind of capped that off. And I think similarly, as the US markets have gone down, we've seen the same thing for Latin America. I've seen funding dropping, I think deal volume dropping for pretty much the same levels. So the same 40% drop that you mentioned, we've seen pretty much the same drop in Latin America. What I would say is that although the markets have moved in lockstep with the US, what we've seen has actually been really different is consumer behavior when it comes to digital usage and the general digital transformation of the entire economy. So if you probably read a lot about the US, about e-commerce and food delivery and online groceries, all of these things that had this massive boom during the pandemic, now going back to pre-pandemic levels, right? Sort of the pre-pandemic historic growth curves. And that's something that's not happened in Latin America, which is quite interesting. So you saw the same kind of boom during the pandemic of digital adoption of things like e-commerce, telemedicine, online banking. But we've seen that actually hold steady and continue to grow. So what we look at today, just to take e-commerce as an example, the levels of e-commerce penetration of retail today are where they would have been about 2.5 years from where we are today if you were to take historic trend lines. So to some extent, the digital transformation in Latin America has held from that pandemic boom, which I think gives us a lot of, optimism in terms of the current environment, and I think how positive that'll be for both existing startups, but also companies that are being formed today.
Why do you think that is? In some ways, so I was in Brazil 2 months ago, and I noticed that, in Brazil, people's behaviors have not shifted that much back to normal, as I've noticed here in the US. Do you think that in some ways the growth curves have now reverted because the country is still shifting back to normalcy? Or do you think that there are specific reasons why the growth rates will maintain as things return to normal?
Yeah, I can actually take this one. So we've talked a lot about it as we've pulled this data for the report, and kind of speculating why we're seeing this digitalization being more sticky in Latin America than what we've seen in other emerging and developed economies. And I think the big difference here is that what the pandemic sparked wasn't an increase in usage for a lot of these services. So it wasn't just people started using e-commerce more often than they used to use e-commerce, or people started ordering more more food from restaurants, but they already did that before. It kind of sparked the first time for a lot of Latin Americans using these types of goods and products. So people that didn't used to have iFood, which is the kind of unicorn juggernaut of food delivery here in Latin America, has over kind of 80% market share here in Brazil. They were downloading it for the first time. And so it's a much harder trend to reverse than an increase in usage, right? So people are saying, hey, I just discovered that I can actually get my groceries online and that's super convenient. Doesn't really make sense for me to go back to getting my groceries in person. And we think that's one of the main reasons why it's been stickier in the region. And this example of food delivery is actually a really good one. So we've actually seen a slight decline in the US from food, like the peak of online grocery shopping back in 2021 to now. It's still growing, but it's below the peak. For us, we're above the peak. So if you look at iFood, it's actually still growing kind of 12% quarter over quarter in this quarter of 2022. So that's kind of our speculation of why that is. And we truly believe that we're not going to go back in time. We say that kind of the genie's out of the bottle here for us in Latin America.
You recently published your famous Latin America Digital Transformation Report. And a couple things that stuck out to us were looks like a new normal in remote work. Can you talk a little bit more about that?
It's interesting that, again, we saw this shift to remote work everywhere in the world. And what we wanted to understand is what are the long-lasting impacts of that in Latin America. And what we've seen, so we did a few kind of primary research studies here in the region to understand how that's played out. And one of the companies that we talked to is a company called Revelo. So they actually help companies both in the US and Brazil to recruit tech talent for early stage startups up to kind of later stage startups as well. And one shift that we've seen is that developers are no longer willing to work in person. So if we look, for example, at the job interview acceptance rate for developers between remote and in-person preference, about 65% of people accept remote offers, whereas the in-person offers are down to 21%. And that's plateaued already. So this is a trend that we're seeing kind of continue throughout. And then another thing that we did is we wanted to know if people were happier working remotely than they were working in person. I think especially in Latin America, where if you've been here, you know that, we're very social. We like going to the office. So we weren't sure if people were actually happier working remotely than they were when they were working in person. And so we partnered up with Runa, which is basically a payroll software in Mexico, a startup that's doing super well. And they surveyed about 500 people in the market, from like HR executives to CEOs to just employees in a bunch of companies in Latin America. And what we found is that employees are both more productive and also more satisfied with the remote model. So when we asked employees that were 100% remote what their level of satisfaction with their work was, from 1 to 5 being really satisfied, the ones that were 100% remote marked a 4.5, whereas the ones that were less than 25% remote marked a 3.5. So they were showing higher levels of satisfaction. HR executives are saying that employees are more productive. So we find it hard to believe that people will go back to working fully in person here in the region. I don't know, Julio, if you have anything to add to that.
I think the one thing I would add, because I think a lot of the founders we speak to, whether it's on the Atlantico portfolio founders or even other people that are just friends of ours that are running companies, is everyone's trying to find what the right model is, right? Is it hybrid? Is it fully remote? Is it fully in person? And there's an added piece of data that we also collected from the market, which is that when companies gave employees the flexibility for how many days and which days they came, rather than saying Monday, Wednesday, Friday, you have to be in the office, and Tuesday, Thursday, you're going to be remote, that level of flexibility also further increased both the level of productivity and satisfaction, like Ana said.
Just curious if you have a take on how this impacts the talent pool's ability to work in local businesses versus global businesses, because we sometimes hear a lot of companies now seeking developer talent throughout North and South America because the time zones are convenient. Do you have a sense of if a talent in Latin America is considering different choices of 100% remote work, where they might what they might choose?
I remember talking to Julio about this when we were first starting the report, and our hypothesis was there's probably a bunch of engineers and good talent in Latin America that's fleeing to more global companies. And we talked to a bunch of people. We actually haven't done any studies, so I can't give you an exact data, but I can give you a little bit of our perception on the market. So it's definitely opened up some possibilities for workers here in Brazil to work for global companies that might have a better value proposition in terms of either they're offering for remote work or compensation. But we actually haven't seen a run of talent to outside of Latin America. And we did do a survey with people, so undergraduate students across a bunch of universities, both here and in the US. And from what we gathered, people were still interested in working in tech, still interested in going to startups or starting a company and doing so in Latin America. So I think the effects of that weren't as big as we originally hypothesized, but I don't know what your perception has been, Julie.
I think qualitatively, definitely what we hear is that there are engineers, especially going to work for international companies, but the opening of the floodgates and sort of this mass exodus to international work hasn't happened. And what we hear anecdotally is that there's still somewhat of a cultural barrier, right? Of how do you work in Latin America versus how do you work in the US? And that just takes a little bit of time and practice to sort of bridge that gap. So just to give you one example, we have there's a company in our portfolio that they also have a software development shop called Jungle Devs that basically hires a lot of the top talent in Brazil and then helps to do remote software engineering work for sort of big tech companies and sort of mid-sized tech companies in the US. And the biggest value that they see from clients is that they can bridge this cultural gap and oftentimes even bridge the language gap. So you still need these sort of facilitator type companies or people to be able to bridge that gap before I think large US tech companies or even tech startups are able to fully tap the potential of Latin American talent.
And related to the question about the workforce, I'm curious if seeing either in the data or just anecdotally in your portfolio, if companies are expanding from country to country faster than they were before, perhaps because, they have employees across different countries in Latin America, they're more willing to expand into those markets. Is that something that they've noticed?
I think we haven't seen companies expand solely because they have access to talent in other markets. But what we have seen is a lot of companies, especially in the fintech space, that are building infrastructure for startups to expand more quickly. So even when we kind of dug deep, so one part of the report is fully dedicated to fintech, which I think you can't really talk about Brazil or Latin America without talking about fintech. That was kind of our first wave of innovation here. And that first wave was mostly kind of geared towards B2C, right? So improving products for consumers, giving access to banking services to those who were previously unbanked or underbanked. And we saw that really strong wave, like Julio mentioned, also with the new bank IPO kind of topping that off. And now we're seeing more of a shift to both B2B and also payment infrastructure. So we're seeing companies like Pomelo who are building the infrastructure for startups in the region to be able to expand geographically more easily, because it's not only the language barrier, right? It's also regulations in different countries. Being able to build that from the ground up is really difficult. Customer acquisition across different countries is different. So talent is a part of that, but infrastructure is also another part of that. And I think that's where we've seen the most development in the past couple of years.
And to that point, your report highlights the growth of e-banks and Pix. Can you talk a little bit about those? Numbers are stunning.
So just to explain to everyone out there what Pix is, Pix is this digital and instant payment system that the Brazilian central bank created and rolled out about a year ago. And just to put it into context, I think a lot of folks talk about UPI, which is India's instant payment network, which has been sort of an absolute success. And just to give you a little bit of context, even though here in Brazil we have 1/6 of India's population, it took Pix only a quarter of the time that it took UPI to reach 1 billion transactions in the platform. What we see today is that the payment volume has reached about R1 trillion a month, or around $200 billion a month. And not only has Pix become the biggest form of digital payment in Brazil, but it's actually become the biggest form of any payment in Brazil. It's actually tied with cash as the payment mechanism that people are using most frequently down here in Brazil. So I've joked internally that probably the central bank has built the most successful payment startup in Latin America, if not the world. And actually, they did this in a budget that was under $10 million. So truly sort of an amazing feat when you think about the ground they've broken and the type of penetration and usage they've been able to do, and kind of bootstrapping this network effect in a way that's very curious, because the way that they sort of solved the cold start problem was actually by regulating it into everything, right? Because what the central bank did was it told all the digital wallets and digital banks that they now needed to have sort of a prominent button for people to be able to execute a transaction via Pix, so that anywhere that you were doing any sort of digital banking, you would have access to being able to transfer money to anyone, any person or any business. And every person in business would be able to register for the system using either their email address, their phone number, or sort of a personal identifying number. So it's very, ubiquitous in that sense. And you have over half of the Brazilian population today already on the system.
Yeah, it's funny. So as I mentioned at the beginning, I went to Brazil. I went back to Brazil for the first time in 8 years, and it was just absolutely shocking to me how pervasive Pix was, and it blew me away. Not only because how everybody was using it, but also by the fact of how much better it is than the systems that we have here in the US. Like, we think that Venmo or Cash App make it simple. Wow, like when you compare it to Pix, it's absolutely different. But to talk about fintech a little bit more broadly, Julio, I think last year when we did the report, if I recall correctly, the number of deals that were getting done in LATAM that were fintech deals was an astonishing number. It was something like 50%. What can you tell us about how fintech has evolved and changed over the last year?
It's continued, basically. So fintech is anywhere between 40 to 50% of either total investment volume or deal volume, whichever way you cut it when you look either across the region or specific countries. But call it half of the volume and deal volume has been fintech or fintech related. And I think obviously the definition of fintech has become a little broader. But just to give you one sense, just last year, fintech was definitely the largest VC investment category, with over $6 billion of investments in fintech companies in the region, and represented 42% of the total investment volume in Latin America. And it's been around that level, like you said, Lucas, also since last year. I think the other curious thing that we've seen here is actually what the evolution has been of these fintech investments. And Ana touched on this a little bit previously, that we had this first wave that was this B2C advent of neobanks and digital payments and things like that. You're now seeing kind of almost a second wave that's a lot more of the sort of B2B fintech. You're seeing B2B payments, you're seeing B2B credit, you're seeing a lot more sort of embedded fintech models within different B2B marketplaces or just software and sort of ERP modules. So it's really kind of a new type of fintech that we're seeing today, and all of this has been spurred on by, I think, in big infrastructure investments. Ana touched on a couple of these companies that have built out the infrastructure for new fintechs to be able to grow. So that's just been able to, fuel this virtuous cycle of innovation and the speed of innovation, the ease of innovation. But it's also been fueled by consumer adoption, right? So if you think about a business that's using accounting software, or they're using sort of an online banking for their small business, that same user, that same human being goes home and uses a great, B2C neobank for themselves. And they start questioning, why can't my business experience be as good as it is for my personal experience? And sort of that consumer adoption and that consumer demand for better experiences also for the enterprise have actually also been able to pull a lot of the innovation and a lot of the growth in fintech in this latest B2B wave.
That might be an interesting segue to SMBs. Can you talk a little bit more about the role of SMBs that you've highlighted in your report?
Yeah, so the reason why we chose to talk a little bit more about SMBs is because we believe that that's an area in Latin America where startups can really enact real change. If you think about Latin America as a region, we have a higher proportion of SMBs compared to other regions of the world. But these SMBs contribute significantly less to the GDP of the region than do other countries. So, for example, in Latin America, SMBs and micro businesses contribute about 25% to the GDP, whereas in the United States, that number is 44%. And in China, that's 60%. So you have a higher number, but they're contributing much less. And why that is, and this is kind of our thesis, but also something that you see on your day-to-day, is because a lot of these businesses don't have access to the basic tools that they need to grow. That covers everything from software, right? So being able to have good management of your cash flows, being able to have access to good productivity tools that enable you to focus on running your business, to access to financial services. So having access to credit, for example, and access to credit that allows you to procure from suppliers in a certain period of time, so that you can control your cash flows. And that also goes for procurement. So I think everyone that's invested in Latin America in the past couple of years has experienced the wave of B2B marketplaces across every single vertical in the region. But that's actually solving a very real problem, right? Which is SMBs don't have access to a range of suppliers, so they don't have bargaining power when they're negotiating for their goods. And so we've seen these businesses pop up in all parts of the value chain to be able to give these small businesses the tools that they need to get to the level of the United States, where they actually give meaningful contribution to the economy of the country. So that's a little bit of why we touched on that. And we've been seeing so many interesting companies in the region that are doing that. We actually at Atlantico recently announced our investment in this company called Fudo, which is a vertical SaaS for restaurants. Is analogous to Toast in the United States, focusing a little bit more on the long tail of restaurants, which is giving restaurants the tools that they need to both kind of manage the day-to-day of their businesses and also to be more productive, communicate with their employers and everything else.
Another company that we featured in this year's report was one of the newest unicorns in Brazil, a company called Olist. And what they do is they help small merchants that want to be able to sell online. They help them take their products or product catalogs and then syndicate it out and sort of manage this across the different marketplaces. So again, it's a way to helping small businesses just sell more using software and using technology. And you can clearly build very large businesses, as Olist has done. And I think as we've shown here on the report this year.
In another area of the report that I know we talked about last year that is really interesting to me is the overall digitization of LATAM, but also how people in LATAM tend to consume a lot more technology, much more active in social media, et cetera, et cetera. If I recall correctly, I think Brazil is number 2 in social media usage compared to the US, which is like 35th or something. Is there any update on that end? Any new findings from the report over the last year that they would like to highlight?
So I think today we are seeing that trend only continue, right? So if you compare Brazil to the US and China, the time spent on the internet by Brazilians today, which I don't know if it's a good thing or a bad thing, but it just speaks to the penetration of social media in the region. So the time that Brazilians spend on the internet per day is about 10 hours. In the US, that number is about 7 hours. And then from those 10 hours, 4 are spent watching TV online, so watching videos online. So we've seen this trend kind of pick up even more after the pandemic. We're seeing TikTok and Quai grow in their usage every day, so kind of climbing the ranks on the most downloaded apps. And Quai is actually a really interesting case study that I don't think we brought last year, but Quai focuses on more blue collar workers, whereas TikTok focuses more on creators. So we're seeing Quai gain some real traction in like the lower income areas of Brazil and giving creators that aren't necessarily professional creators, but are creating content that is relatable to the population in Brazil, the ability to promote that content and monetize on that influence, which is a big problem that we see here in the region where creators have a lot of influence, but very little cash.
It's an interesting point that comes across in your report, which is the digital and social media adoption is really high, but the percent of GDP in tech companies is under-indexed versus other countries, right? Which suggests opportunities. Could you say a little bit more about that?
Every year we publish what we call the Atlantico digital penetration index, right? So we're trying to talk about really sort of how much technology penetration is present across the world. And the way we calculate that is by taking the sort of total market value of publicly listed technology companies from a given region, right? So you take all these companies that are listed and you compare that to the size of the GDP, just to have a sense of sort of the order of magnitude. And if you look at a number of this digital penetration index, if you look at a more developed country like the United States, for example, that number is over 50%. I think if it's 52% to be exact, last year. When you look at that index, that digital transformation index for a country like the United States, this year that number was over 50%. It was 52% to be exact. And you look at other countries, other sort of fairly digital countries like China, that number is still around 20% this year. But when you compare it to Latin America, we are an order of magnitude below that, right? You look at the value of the technology companies here, and you compare it to the regional GDP. That ratio is only 1.5%. Even if you look at Brazil's at around 3%. So I don't know if the 1.5% of Latin America and 3% of Brazil are going to go all the way to 50 like the United States, or they're going to go closer to the 20% that China represents, or even the 15% that India represents, a country that is fairly digitalized but has a much lower level of income per capita than Latin America and then Brazil as an example. But we definitely think it's going to be a lot closer to sort of India and China. And when you think about the potential for value creation, right, as technology companies spring up here and they grow and they scale, and you continue to see this digital transformation happening across the economy and society, you're talking about value creation that's nearing $1 trillion. Right. Obviously, you're not going to be creating $1 trillion of value overnight. But if you look at the next 10 years, next 15 years, which is roughly the sort of the long-term view that we think investors should be taking when sort of making a big bet in the region, you're talking about, value creation that's in the trillions of dollars, not in the millions of dollars.
And Julio, talking specifically about social media, I know that you spent a lot of time, correct me if I'm wrong, but setting up and building Facebook in Brazil. Brazilians are one of the largest social media consumers in the whole world. We haven't seen social media companies spring up in LATAM. Do you have a take on why that is? I think in the case of China, we see TikTok, we see those companies coming up. India, I believe, has some of their own apps. Why isn't that LATAM has been able to come up with their own social media apps, even though they consume it more than anybody else?
I think that's a great question. And as you mentioned, Lucas, I was the first Facebook employee in Brazil. I joined Facebook and moved down here in 2010, so over a decade ago. And just to put it into context, at that point, Facebook had roughly 1 million users down here in Brazil, 1 million monthly actives. And I was sent down here with the task of, helping Facebook grow, basically accelerating that growth. And that's exactly what I did over that first year down here. We got from 1 million users to over 10 million in about the first 6 or 7 months that we were really focused on the region. But curiously, and maybe this is a response to your question, we were actually fighting a local incumbent in the social media space, which was a social network called Orkut, which was actually Google's social network. It was actually sort of the pet project of an early Google engineer whose first name is Orkut, actually. And it was a social network that kind of sprung up, and no one knows why, but really grew massively in Brazil and in India. So when Facebook had about 1 million users down here, Orkut had over 30 million monthly actives in Brazil. This at a time when the Brazilian internet had something like 60 or 70 million people accessing every month. So Orkut really kind of very dominant. So one could argue that even though Orkut wasn't started in Brazil, you could say it was maybe perhaps, the first big social network that was, Brazilian, at least in DNA and soul, and that sprung up here. And there's an argument to be made that another Orkut could be built, by Brazilians, for Brazilians, or maybe for the emerging markets, or even for the global markets. So I think just because it hasn't happened yet doesn't mean it's not going to happen in the future. And we do think that we have sort of an edge when you think about user empathy and usage in terms of trying to think of what could be the next social product that works here, and potentially that next social product that works here is the same one that could actually scale globally and be the next big social platform.
which would be great, because for those of you who've never used Orkut before, you should definitely try it. I think it's up and running again.
That's funny. Yeah, it's interesting to me because something that also gets missed is that both Instagram and Facebook had Brazilians on their co-founding teams, right?
Yeah, I mean, in the case of Instagram, Mike Krieger, who was one of the two co-founders and was the CTO, also happens to be kind of an old-time friend of mine. And the company I started back in 2010, a company called Peixe Urbano, that was a daily deal local services company down here. Actually, the very first version of Peixe Urbano, the person that built that was Mike Krieger. So just kind of coming around full circle in the social networking Brazilian world.
That's awesome. So, team, we talked about a few key areas. We talked about digitization, SMBs, remote work, fintech, and a few more. I'm curious if there are any other key takeaways from the report and any areas that you think are particularly interesting that we have not covered yet.
I think one additional thing that we covered this year, and this was more of a learning experience for us as well, to be really honest, but we went into the world of Web3 and crypto in Latin America. And I think the thesis behind that and the reason why we did it is because we believe that the social political challenges that we have here in the region make it a fertile ground for crypto companies to spring up, right? So as you know, we have a lot of struggles with high inflation, high prices of financial services such as remittances, and these are a lot of the problems that crypto companies are trying to solve. So we figured, hey, let's look at the market, let's see how it's been developing, and whether there are any interesting companies that are actually attempting to solve these problems. And I think a lot of people who have looked at the market in the region know about the big exchange companies that were created here in Latin America, like Bitso, and in Mexico, and Mercado Bitcoin. But what is a little bit more obscure, I would say, and it took us a long time to kind of get to this data and to find these companies, because to be honest, they're super, super early on, is that a lot of really early stage crypto companies are springing up in the region. And that ranges across different verticals. So that goes from DeFi, so providing users with accounts where they can get higher yields. That goes to wallets where users can hedge for inflation and store their money in stable coins, for example. And we're even seeing a movement from the central bank as they release CBDCs, right? So their own digital currencies in the region. And when going back to the social media point as well, we've seen a lot of really cool NFT marketplaces spring up here, which makes a lot of sense, right? When we go back to the idea of wanting to bridge this gap between creators having a lot of influence but not being able to monetize on that influence. These are the types of platforms that allow creators to really own their art, and be able to kind of finally monetize on what they're creating. So that's one area that we're interested in, been digging deeper into, but it's still very early days here in the region.
In reflecting on the report, are there any implications you can share with founders as they're thinking about fundraising these days? Like any implications on round sizes or potentially traction that might need to be true for founders to raise these days?
I think that my main advice to founders, and we repeat this time and time again to the Atlantico portfolio, is that we're at a moment where you have immense opportunity ahead of us, right? We talked about this digital transformation index and how much more potential there is to grow in the region when you think about the long term. But also we spoke about this particular moment in time that we're seeing of this, hop in, 2.5, 3 years forward of, digital usage in the region, something that's persisted here, unlike more developed markets like the US. So the timing is good, both in the short term and the long term. But it's also a time that requires a lot of caution, right? We've seen that funding has dried up and definitely has slowed down globally, and Latin America is no different. Obviously, valuations are getting squeezed as, public market comparables start to trickle down and cascade down into the later stage companies and eventually even to early and mid stage companies. So founders really need to be very mindful of the cash they have on hand and the runway they have ahead of them, and trying to think about how can they be, perhaps making decisions to be a little bit more conservative, to extend runway, ensure that they're able to make it through at least the next year, if not 2 years of turbulence, and continue to be in the game, right? Continue to play. And one of the things that maybe we saw in the report, again, sort of some primary research we conducted that, frankly left me a little concerned, is that when we surveyed founders, most of them were taking actions to increase runway by, call it, about 6 months. And I don't think that the moment that we're in is one where you should be thinking about everything is going to be back to normal in 6 months. I think much to the contrary, I think that what we had last year is far from normal. I think that we're going to go back to probably a much steadier state, which has, less funding, lower valuations, money is more expensive and more scarce. And I think that requires founders to prioritize unit economics and sort of good business metrics and good profitability metrics greater than, let's just say, growth at all costs, which is a little bit of what the market was rewarding last year. So, first of all, it's that mindset shift of we're not just trying to add 6 months of runway here, but potentially we want to add another year or two of runway. And another piece of data that we also collected was that when we surveyed founders across the region, we saw that about a third of the companies had actually reduced any of the headcount, which is, by far the largest cost that startups have is around headcount. And not only that, but when you looked at the headcount reductions that were executed, we saw that around 80% of people that reduced headcount reduced 10% or less of their workforce, right? And sort of a 5 to 10% reduction in workforce is not really a reduction, right? That's kind of optimization, or it's kind of a big performance review that you're conducting. So founders need to take this more serious. I think they need to not just cut the fat, but they need to perhaps cut into the muscle, maybe even cut to the bone, to be able to think about, how do I survive through this period of time? Because if you're able to survive, then the market that we're in and the size of opportunity is so massive that it's not something you want to squander by just being overly optimistic and not maybe exercising the caution that would be that would serve you well at a moment like this.
Sound advice. And then going forward, what businesses are you most interested in funding? What are you looking for?
So we don't think we're in the business of predicting the businesses that we're going to fund, right? We don't want to be the ones defining what the future looks like. We want to keep our doors open for founders that are the ones reinventing the future to knock on our door and kind of be able to present these sort of novel business ideas and novel models. And we want to be the money that goes and backs them and then helps them scale it. We think that there's plenty of opportunity when you look at these categories that we discussed, right? So vertical software, digitalization of SMBs. We think that those are amazing markets with a lot of problems that need software and technology to be solved. We do think that sort of this new wave of fintech, be it embedded lending, embedded fintech, be it sort of more B2B applications of fintech, we think that there's, again, it's sort of ripe for disruption. We think there's a lot of potential to go forward, and I'm kind of waiting for people to be able to tell us what those models are and sort of actually put that into practice and show us the traction that goes there. And I think like Ana said right before, we do also think that there is opportunity for Web3 companies and crypto companies to solve real problems that we have plenty of in the region through some new technologies and through some new approaches, be it NFTs for monetizing creators, is it maybe DeFi for reducing the costs or increasing the efficiency in the financial system, or anything else in that sector. So we're open for business and waiting for founders to come and tell us a little bit more of the future we should be backing.
Awesome. And to talk a little bit more about the funding side, do you think it's possible that, as funding dries up overall, that all of these US multi-stage investors that have been deploying heavily in LATAM over the last couple of years decide to go back to usual and, invest only in the typical regions that they previously invested in? I'm curious if you have any data to show that if that's already happening, or if you think that could happen in the next few months or years.
Yeah, it's funny. We were just at lunch with the founder before this, and he asked us the exact same question. I think what we're seeing, so we actually did pull up some data on this, and what we saw is that there is definitely global investors that are pulling out of the region. These tend to be, from what we've seen, investors that are more that took a more tourist approach to Latin America, right? So it was more, let me see what's going on there in a time where I do have the capital to explore and to innovate, which is a fair strategy, by the way. But I think as capital dries up, these investors are saying, hey, let me get back to what I really know how to do, right? So we are seeing a decline in global funding in Latin America, but that decline is being sort of made up for by local funds. So what we saw is that if you look at 2021, the top deals closed in the region by the 20 most active investors, right? We had about 60% of those being done by foreign investors. And if you fast forward to 2022 and where we are today, we're seeing local investors regain market share over the global ones. So today we have about 51% of the investments done by local investors. And it's not all global funds that are pulling out. There are a lot of global funds that have made really like structural moves to be present in Latin America. They've opened offices here. They've hired teams here. They spend a lot of time researching the region, and the volatility in the market, they're being hit by that in all the regions that they act, right? But there are a lot of investors that truly believe in like all of the fundamentals that we've been talking to you about today. So I think that decline is not as steep as we expected. It has been happening, but we think there's still funding available in the region.
Awesome. So to get near the closing, two areas that we have not talked about yet related to macro is the economy of these countries and the political tailwinds or headwinds that they may be going through. Can you talk a little bit more about what do you think is happening and could happen to the economy of Latin, especially Brazil, Mexico, and Colombia over the next couple of years?
Yeah, so we're not macro specialists, but we do like to try to read up and know what's happening in the world. So I think a lot of what I can share here is not sort of original research that we've done, but things that we've heard from people I think that are probably much more knowledgeable and smarter than us on sort of macro themes. I'd start with maybe first the political situation. What we've seen across the entire region over the last couple of years is for a move that's much more leftward, let's say, in the political spectrum in every different country. And this is through elections in Mexico, in Colombia, more recently in Chile. Argentina has already been much more left of center for the last couple of years. And now in Brazil, in October, we're about to have our new presidential elections. And the polls seem to be pointing to the sort of the left of center candidate, our old president, potentially being reelected. So you definitely do see sort of this red shift or leftward shift across the region. What that's meant has been a mix of things. I think in some cases it has created a little bit of political instability in some countries. We see this a lot in Mexico and Colombia in particular, where foreign investment has paused or has decreased as foreign investors, especially in infrastructure, have tried to have a better sense of where the government's at. In countries that have much more mature institutions like Brazil, that hasn't really been a question. And I think the market has been pricing in that, whether it's the current incumbent president or sort of the more left-leaning president gets elected, that it shouldn't really have any meaningful impact on the economy in the short term and shouldn't really cause any sort of political instability, neither in the short term nor in the long term. So the markets, feel that the economy is strong enough and institutions are strong enough for the country to continue to grow. All that said, the global environment is such that we're entering into a global recession, right? And Latin America is no different than what's happening in the US. It's no different than what's happening in Europe. So we are seeing rising inflation, right? And then, as with everywhere else, you are seeing central banks raise interest rates to try to fight some of that inflation. And you are seeing sort of mixed results of that. But, it does seem like inflation is slowing down and seems to be peaking in the region, much as it does elsewhere. So we think we're sort of at around, peak interest rates currently. And we think that it's going to bring inflation under control. I think that the one, tailwind that potentially the region has when you compare it to other countries is that you also are seeing a kind of a global boom in commodities, right? You're seeing energy prices go up. You're seeing, food prices go up globally. A lot of this because of either, supply chain disruptions that are happening mostly out of China, related a lot of times to COVID lockdowns, or because of the war in Ukraine, and you're seeing sort of obviously all these disruption of exports from there. And because Latin America is a net exporter of a lot of these commodities, it has helped the region gain some, both in terms of having some economic growth, because now we're exporting those commodities that are more highly demanded and highly priced around the world. But it's also helped the local currencies, right? So when you think about from an FX standpoint, because we're exporting more, it has also helped to undo a little bit of the downward pressure you've had on foreign exchange.
Amazing. Julio, Ana, thank you so much for coming to the show. And then for those that want to read the report and learn more about you, where can they go?
I think the best place to go is to go to our website. It's atlantico.vc. And there you can download the report, you can see videos, you can see a lot of articles that were written related to this. There's a lot of interesting content there, and obviously you can learn more about us. But thanks again for having us, for the great conversation. Anne and Lucas, always a great pleasure to see you.
Thank you so much, guys. It's great to be here, and looking forward to the next one.
If you're an early stage entrepreneur, we'd love to hear from you. Check us out at villageglobal.vc.